In this video, I'm going to show you exactly how my dividend wheel is turning out. So much criticism about me and my dividend wheel. Well, I'm going to show you exactly how we're adding more shares of dividend paying stocks. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, we are going to talk about my dividend wheel because not many people liked the idea when I introduced it about a couple months ago. The dividend wheel idea uses two ideas, and I'm going to bring you up to speed really quick on what we're doing. But more importantly, I'm going to show you how I'm knocking down buying more shares of a dividend paying stock. So let's go ahead and get to this. If you like anything you hear today, I want you to subscribe to the channel. And hey, look, if you like what you hear today, bang that like button. It lets me know you like what I'm doing. Now, what we're doing is this. We're talking about the dividend wheel. I'm going to briefly explain the idea, and then I'm going to show you how I put it to work over the past couple months, and I'm going to show you the results. Now, the dividend wheel idea is very simple. If you understand the traditional selling premium wheel, see, the traditional selling premium wheel would have you pick a stock, and what you would do is you would sell an at-the-money cash secure put so you can obtain the shares. You would then obtain the shares and write an at-the-money covered call, having your shares taken away. That begins the first half of the wheel. Because we're doing this for 30 days, that's basically 2 weeks. We do it again. Now we have our cash. We do another cash secure put, same stock or another stock. We obtain the shares. We go ahead and write the covered call, have our shares taken away. That is the traditional selling premium wheel. We make premium the 4 legs of the trade, and that's what we want to do, collect the premium, right? And they're at the money premiums, so we make the most amount of premium that we can. Now, what I've decided to do with my dividend paying stocks and ETFs that literally sit in my account and they don't move for about 29 days, I've decided that I'm going to wheel that money. Okay, we're not talking about the dividend paying stock. The dividend paying stock is what we're going to buy. We're going to collect the dividend, and that would be step 1. On the X date, which is the X dividend date, it's trading X dividend, we sell the dividend paying stock. Now, what we're going to do is we are going to pick a stock or an ETF, a 3X leverage, a 2X leverage. We're going to write a deep out of the money cash secure put on that new stock or ETF. What we're going to do is try to find a premium that might equal the dividend we just collected. And now we're going to do this for 5 days. And what we're hoping for as we get into expiration, where we could be assigned the shares or not, right? A cash secure put is where I put the money up, telling the greater stock market, I'll buy your shares. I'm going to give you a time frame. That would be the 1 week. And you're going to pay me a per share premium. Well, I'm going to pick a strike price out of the money, meaning lower than where it's trading now. And we're going to pick up a premium that might equal what the dividend was. And I'm going to show you how I do this. I have actual trades that I've done, and I'm going to show you this. So stick around. What we hope is that we can either buy back that option on Friday for less than a nickel, or we let it go to expiration and it's worthless, and we have the money back in the account. That would be then step number 2. Step 1 is we collect the dividend, sell the dividend paying stock. Now, step 2 is we write the near term cash secure put deep out of the money, collecting a premium which would equal the dividend we just made. And now that trade's done. We haven't been assigned the shares. We put on another trade, maybe even using the same stock. We try to do this 3 times. Here's the deal. That last week, that last cash secure put, we have to be out of our cash secure put positions because we buy the dividend paying stock the night before the X date. That is your dividend wheel. And what we're going to do is take the dividend and all of the premiums we collect, and we're going to buy all of it that night before the X date. So say, for example, we had 1,500 shares. And we do all of this mumbo jumbo, and we make in cash an additional 200 shares. So now, when we go to buy the dividend paying stock so we can collect the dividend, we're not going to buy 1,500 shares. We're going to buy 1,700 shares. And then we repeat the process. Now, my members see all of my dividend wheel trades. So it's one thing to talk about this, but I actually put it into action. And that's what we're going to do. I'm going to show you right now the trades that I've done and how I've worked them and how many extra shares I've collected. So if you're interested in that video, click on videos below and then find the dividend wheel where I'm printing more and more and more dividend shares using the idea I just talked about. Now let's talk about the results. Because when I did that video, the comments were loaded with naysayers. Now I get it. Everybody's saying, look, man, it's a paperwork nightmare. Taxes this. It's just too much to deal with. Well, you know me. That doesn't bother me because I'm in the business of taking every single dollar and trying to make it most efficient in my investing life. So to have a dividend paying stock that in 29 days literally trades like this, and for the most part, it's even, I'm going to go ahead and use time as my advantage. And what I mean by that is when we sell cash secured puts, we are selling time. Right? I'm going to put the money to the sideline and I'm going to give somebody the time to assign me their shares. So I'm using time to my advantage. Well, in this case, this is exactly what I've done. Now I'm doing this on about 5 to 6 of these monthly paying ETFs. And it really doesn't matter which one. I just make sure I'm in the dividend paying stock the night before the X date. Now, a lot of people get this confused. When do you have to be in a stock? Is it the payable date? Is it the report date? Is it the X date? Here's the most simplest explanation. When you see the X date, that means the stock is trading X dividend, which means the night before they took the dividend out of the stock price. See, you can't take money out and give it to investors without taking it away from the stock price. So the X date is when you can sell it because you are obligated to the dividend because you held it through the X date. Now, the report date is about 3 days later, and what that means is all the brokerages send all the information down to Wall Street. Now, what is Wall Street? It's really the companies for which they run the dividend-paying stocks. They need to know who's going to get the dividend. So that would be the report date. And that's usually about 3 days after the X date. And then, of course, you have the payable date, which might be 5 to 7 days after, and you get your dividend. So that explains the X date, payable date, report date, all in one shot. You have to be in the stock the night before the X date. And then the day after, you now own an asset that is trading X dividend. So you are obligated to the dividend, so you could sell immediately. So this is what we want to do. We collect that dividend, and that's beautiful. What I want you to notice, and I want you to focus, is right here. This is my June numbers. Notice what we did. On the X date, I went ahead, of course, the night before I picked up the dividend. That was 33 cents for SPYT. So I collect that dividend in cash. We're going to make a note of that, and we're also going to make a note of, based on where it's trading now, that's 25 new shares. So we're going to end up buying 25 more shares eventually, but we have a lot to go. So what I do is this, I sell it, and now I have $29,000 ready to rock and roll. So what I do is this, I'm now going to pick some stocks or ETFs for which I'm going to write 1 week, maybe 2 weeks, but for the most part, 1 week, deep out of the money cash secure puts. And what I want to do is basically generate a cash secure put premium that would equal the 30 cents. So I'll give you an example. Say we're going to use BitX. BitX is a great example because it's a 2x leveraged ETF to Bitcoin. Very volatile. Now, say BitX is trading for 27. I want to use a cash secured put on BitX for which I think if Bitcoin is trading at 54,000, I'm then going to go ahead and do a cash secured put on BitX at that number. And by the way, I have that calculator, my 2x leveraged ETF calculator, and pick your cash secure strike price calculator at the members website. Got to be a member. Go to cptdashboard.com, click upgraded dashboard, get your 1 free month. You get all these tools I'm talking about. I'll give you a little peek at it here. It's a very simple calculator, but I use it all the time. This calculator has the pick your cash secure put strike price, the double down calculator, and it now has the expected stock move calculator. I use this all the time. Now, if I want to use a deep out of the money cash secure put on BitX, okay, BitX is the 2x leveraged ETF to Bitcoin, but I want to pick my price in and around when Bitcoin itself is trading for 54. Well, I'm then going to use the pick your strike price calculator for BitX because remember, it's 2x. So with that said, you could see this is where I would get involved with BitX for a deep out of the money cash secure put. Now, this is very important because we don't really want to be assigned the shares. So if I think Bitcoin is trading in a range and 54x is its bottom, I then want to sell the cash secure put that is equivalent to that for BitX. So recently I've done this where BitX is trading for 27. That cash secure put would be around 24, and I would pick up in and around 50 cents for a cash secure put premium. So that's the idea. What we're hoping for is not to be assigned the shares. So taking a look at that first month, you could see the very first trade I do is on yen. Now, early on, I wasn't doing deep out of the money strikes. I'm very confident in my cash secure put skills. I wasn't going to be assigned the shares. Now I've changed that because since I started this, I was assigned the shares once. And I said, we're not going to do that again. We are going to pick strike prices that are deep out of the money so we don't get assigned. And by the way, you could see it right here. This is that BitX trade where I picked the 24 strike deep out of the money because BitX is trading for about 27, 28. This strike price represents Bitcoin falling to 54,000. And I believe that's the bottom for Bitcoin. So I do that, and you could see I pick up 75 cents. Now that's wonderful because that's not 33 cents, that's 75 cents, over double. Well, notice in the beginning, I was definitely doing strike prices where I was collecting much more premium. And you can see $1.50, $1.05, 75 cents. So the more premium you make, you're probably tighter to the money or where it's trading. Well, you could be assigned the shares. I don't want to be assigned the shares. So I'm now picking deep out of the money strikes where I collect that little crumb. And the crumb I want to equal about what the dividend is. So we can do this time and time again. So looking at where I'm at, you can see a couple things with my calculator. I have to be back in the stock in and around the 29th because around the 30th, 31st, or 1st is when SPYT distributes its dividend. So I get to wheel and deal until then. And you can see what I've done. I went ahead and did 3 of them. And when we did 3 of them, we picked up 25 extra shares on the dividend. When we got the dividend, we did 3 cash secure puts for which I picked up 30 shares, 32 shares, and 38 shares. Now we're ready to get back into the stock because we've done this for 3 weeks and the ex-dividend date is coming. I have to be back in the stock. And guess how many shares I end up buying? I end up buying 1,657 shares. So look at how we're adding shares, which means we're adding money. Because when I do this again for SPYT, I'm going to have more of a distribution and we're going to be able to do more cash secure put contracts, generating more shares. Now, PYPY is a great example of this because we literally start out with 1,500 shares. We collect the 43-cent dividend. We have about 25,000 in cashola. I go ahead and do 2 big fat cash secure puts. We generate an additional 138 shares. It's a simple idea where we're going to take time. We're taking time and we're getting paid for it. What do you mean by we're taking time, John? Well, we're going to hold this dividend stock for almost 30 days before we get paid again. Well, that's where we're going to use time to our advantage because we are going to own the dividend paying stock the night before the X date. We're going to get that nice dividend drop and we're going to make note of how many shares we would have bought. We're going to do a cash secure put, another one, and hopefully we get 3 in. We then get back into the position. Now you say to yourself, this is just too much work. What I'm here to tell you is this. Could you imagine? Take a step back with me. So let's just say I add 200 shares per month doing this. With the dividend itself, I think over a course of 12 months, if I'm collecting about 16 extra dividends based on the dividend, let's just say if I'm collecting an additional 16 shares per month, and because we're collecting a little bit more, I'll go ahead and add a little at the end. So let's do a 12-month deal here. 16 extra shares times 12. And because we've been collecting a couple more dividend shares, let's just say I make a little bit more and we'll add an additional 10 shares that we can buy. So for an entire year, if I use the dividend to buy more shares, i.e. drip it, or I actually buy it, I'm going to collect about an additional 202 shares. So that would be 1,500 plus 202, that would put me at 1702. So 1702 is a great number, but that's annual. That's an annual number. Let's look at me versus that. So let's just say I don't make the 200. Say, John, you're not going to get off 3 trades. You're only getting off 2. Maybe you get off 1. So the 200 number is pretty big. Well, how about you and I agree that using this strategy, I can pick up about 140 shares. So now let's do 140 extra shares per month. And when we do that number, we collect an additional 1,680 shares. Now, just like I did in the last calculation, we have 1,500 shares and we are now adding 1,680. And when I do the math, we now have 3,180 shares. I have literally doubled my dividend share count. And oh, by the way, let's take $3,100 and multiply it by that 43 cents. And when we do that, we are generating $1,367. Could you imagine making $1,367 every single month? And you take that money and you divide that by the share price. Let's go ahead and do that. That would be $18 at the current price. We would be collecting an additional 73 shares every single month, blowing away the guy that is writing in the comments saying, it isn't worth it. It's too time consuming. Well, I'm here to tell you, that's exactly what I'm doing. Knocking it down. This is my spreadsheet, and this is what I'm doing. You can see with AMDY, I've added 270 shares. You can see it right there. PYPY, 222 shares. SPYT, we've added to the point where I have 1,657. These are all from 1,500. YMAX, 1,601 shares now. We started out with 15. YMAG, we're just getting going with YMAG. ULTY, we're at 1,700 shares. Look, I'm going to tell you now, you follow me, these are the ideas you get. We're using 2x leverage ETFs to reduce our cost basis, and I just did that on AMD. I'm in AMD at 180, reduce my break even, 2x leverage ETF trade, I'm getting out much lower. See, these are the things we do at the membership that you're not seeing. And oh, by the way, you saw that video? I don't know if you noticed, but there's a lot of members videos there that you don't see here. And in fact, most recently, we did a video on doubling down using a 2x leveraged ETF. And I explain exactly how I did it. And those 2 trades are on right now. Hey, look, at the end of the day, my membership's all about you taking a peek over a successful active trader's shoulder. That's what I do. I show you the world through my eyes. And we did 41 trades last month, and we're probably going to have about 31 this month. And every single trade, I buy a dividend-paying stock. Now, today you saw PYPY, AMDY, YMAX, YMAG. Right now, I have other dividend-paying stocks that I'm buying. I have a complete list of them. I think I have 13 of them that I keep buying, taking my cover call premiums, and buying more of them. I'm going to leave you with this. I don't take a nickel out of my family's vacations, dinners, night on the towns, buying new car, none of that. None of that to do what I'm doing. I use the cash secure put and the covered call to generate beautiful premiums, and we buy dividend paying stocks. I call it my dividend tree grove, where I'm planting dividend trees month over month. And month over month, I'm generating fat monthly dividend checks. I tell you what, in February, we started with 0. We now are working on our 7th one, now generating close to $6,000 a month using covered call and cash secure put premiums, buying a dividend paying stock. And when that dividend paying stock produces a dividend, we buy the current dividend tree plant. We are planting dividend trees for which, when I stand atop my dividend tree grove, I look down at all those monthly paying stocks. That is our true legacy. That's how you think wealthy. Hey, look, cptdashboard.com, click upgraded dashboard, get your 1 free month offer, join me, and watch me work. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.